Welcome to the Family Banking Show with your hosts Rob, Derek, and John, where we dive into the world of the infinite banking concept and discuss personal banking strategies to secure your legacy and build generational wealth. We're glad you're here, and we hope this episode serves you well.
All right, welcome back, ladies and gentlemen, to the Family Banking Show, where your hosts, Derek, Rob, and John, talk about the infinite banking concept and how you can implement this into your life and for your own family. In this episode, we're going to be giving you a broad strokes overview as to what the infinite banking concept is and how it's a vehicle for you to take back control over your finances. So as we define the infinite banking concept, first and foremost, I want to say that it's a financial strategy or a concept that was taught by Nelson Nash in his book, Becoming Your Own Banker, where everyday people can replace what bankers do in our real lives. And as we think, guys, as to what a bank does, they serve many purposes, but first and foremost, a bank is a place where people store their cash or their capital. A bank allows access to that capital. Either we could withdraw it from the bank or we could take out a loan from a bank and utilize other people's money. Banks would then charge interest on those loans, and that's how they become profitable. And a bank controls who gets approved for their loans and for how much they might get approved for, and the terms on those loans as to how they get repaid. So with that backdrop, and as we think about the infinite banking concept, we're going to discuss this in two references or frames of mind. We're going to talk about the process and the concept of infinite banking, and then we're going to talk about the product. How do we actually do this in real life? So John, why don't you tee us off? Tell us a little bit about the process and the concept of infinite banking.
Yeah, so banks, first and foremost, they store money. And that's something we all have to do. Everybody in one form or another makes money, and that money goes somewhere. You could cash it out and you could put it under your mattress and use it for your daily needs. You could store it in a bank checking account, a bank savings account. You could even get, a little bit more advanced and do certificates of deposits. You could even invest it in stocks. You could put it in a 401k or a tax qualified retirement plan. The point is, your money is going to reside somewhere, and the infinite banking concept addresses where you store your money. And I think some important questions are, can you control it? Can you access it? Is the government involved? Are there tax implications with what you're doing, where you're storing your money? And is it going to grow for you? So I'd say, the storage aspect is an important first piece of considering your own personal banking system.
Yeah, when I start thinking about the way I store my capital or my cash, I question whether or not it's truly safe. And if you even think about banks, right, we've seen the headlines in the news about banks failing right now. And even the FDIC insurance, once you start to look into that system and question whether or not it's a legitimate system, you really start thinking, okay, is there another place that I can store my capital, store my cash that is truly safe, out of the hands of other creditors and out of the hands of bankers and their ability to fail? Rob, tell us a little bit about the financing system. When we think about a bank, they need to create loans in order to generate a profit or a revenue. Tell us a little bit about how we can mimic that.
Well, like John mentioned, that we have to store our money somewhere. And until, my eyes were open, with Nelson's book, Becoming Your Own Banker, I didn't realize that there was a place that I could build on my own that could be my own bank. And so that was really an eye-opening moment that I didn't have to, put my money into the system. There was an option that was, like you mentioned, John, we'll probably get to this, but it's safer. It's, tax-free, it's private. All these aspects we'll be getting into, more. But that was really a revelation that, I don't have to do what the system is saying. There's this option that's even better that no one knew, no one knows about. That's what we're trying to do. We're trying to educate everybody about it. And you can establish your own bank. So instead of having to rely on a system of external lenders, you capitalize your own system. You become the lender through a dividend-paying whole life insurance policy, building that cash value, and then leveraging against it through policy loans. You lend to yourself. And then when you lend to yourself, you become the banker. So then you get to take advantage of the profits that interest generates. You're paying the loans back. You're a mutual owner in the insurance company. So all of that interest that you would have been paying to some bank, you're now paying back into your system, and then you get the profits of that interest back as annual dividend, annual dividend payments. And so you can then start recapturing all of the expenses, the interest, all of the things that you get charged from a different bank. You get to profit from all of that. So that's, I think, one of the big pieces of that puzzle of how you can start accelerating your own family banking system by using a whole life policy to become your bank.
That's great. Yeah. So as we think about what a bank does, first they store capital, then they loan it out and they generate a revenue and a profit from it. And so now that we're trying to emulate what those bankers are doing, and we've created a system for ourselves where we can store that capital and write loans against it, now we have to control it. We are the gatekeepers. We are the safekeepers of that capital, making sure that it stays secure and that it's safe for many, many years ahead. And so what that means for you and I on the personal level is we get to determine who gets a loan and how that loan gets repaid and for how long. You set the repayment schedule for anyone that you were to give a loan to, whether it be to yourself, a family member, or an outside investment. Your family bank will only be as profitable as you make it to be. And that starts by controlling the cash and the function that a banker would really have. John, tell us a little bit about those future opportunities.
Yeah, I mean, it's called the infinite banking concept for a reason. And this point is specifically going to focus on the infinite side of things. Becoming your own banker and having access to a readily accessible pool of money gives you opportunity that otherwise you wouldn't have. An example would be real estate. Many, many people see real estate deals out there and aren't able to capitalize on it. Most of the time, it's because they don't have a substantial saved up amount of money to, say, put a down payment on or even purchase it cash. And we see, especially over the last 3 or 4 years, we see these competitive real estate markets, and we see that people come in with all cash offers. And everyday people, I was one of them, wonder, how is that even possible for people to just come in with all cash? And it's because they have a system. Maybe it's IBC and maybe it's another type of system, but people have systems to have a ready access to a pool of money. And so that presents so many opportunities. I just touched on real estate as just one of them. But there are so many opportunities that your eyes are going to be open to as your pool of capital continues to grow. By the way, it'll guaranteed it will grow and still be able to, in parallel with that growth, you'll be able to use it. And we'll show you how that's possible. Another way to frame that is your dollar's doing multiple jobs. It's growing in one lane. It's being used for an investment opportunity or whatever you may need to use it for. And we'll get to this later. It also provides you a death benefit, a security and a protection for your family, for your business, whatever situation you may be in. And so those multiple jobs, those infinite, truly, opportunities there are, and we're already seeing just people get so creative in the IBC community that we're fortunate to be in. Those opportunities only come when you have a built up pool of cash that you're able to access and that it's going to safely be accessible and also grow at the same time.
You could say it opens your eyes, right? Something that I didn't notice until before that, like you said, John, you capitalize your system, you start to build up cash value in your policy and policies, and then you start to see opportunities, because that's the word, that's the saying that we have is opportunities will find you. When you have capital, opportunities will find you. And so that's really true. And if you don't really even start to pay attention to things like that when you don't have capital that's ready to be used, and leveraging that capital. through the way you leverage it, through a policy loans against the cash value. So you build up that, you capitalize your banking system over time. For me, we really didn't touch it. In my family, we didn't touch it for a few years, just with capitalizing it and capitalizing it. Doesn't mean you have to wait that long. If you have, if you see an opportunity and you have cash value, take advantage of it. If you need to leverage it for something, that's what it's there for. It's your bank. If you need to repair your basement, like that was one of the projects we had to do. So you just, you leverage against it with a policy loan, and then you can take advantage of those opportunities that you might see. And it's real powerful. It really starts to open your eyes. Like you're saying, John, you have this cash value. You could then walk into a deal with cash. You're not waiting on a bank. The thing I love about policy loans too is when you call the insurance company to get a policy loan, they don't ask you what it's for. They don't care what it's for. They just say, how much do you want and where do you want us to send it? And it's kind of like mind-blowing when you think about that. You're not going hat in hand to the bank, to the bankers, to the banking system. You are the banker. So you have a contractual right within the policy to get policy loans against your cash value. So it's a simple system, and it really just frees you and opens your eyes to like how it can be leveraged. It's not an or asset, it's an and asset. It's not life insurance or the stock market, life insurance or real estate, life insurance or a new car. It's life insurance and. And I think that's really a big light bulb moment for people.
Yeah, that's awesome. Yeah, as we continue to think about infinite banking as a concept or a process, we've talked about it being a place where we can store our capital, a place where it's safe, it's liquid, it's accessible. It's an environment that we can control. We can control the repayment on loans as we loan it out and try to generate a profit like a traditional bank would do. Or we can go and invest those funds, as we've already talked about, perhaps in real estate or stocks or starting a side hustle or business, whatever it might be. You get to determine it. You get to determine how successful your bank is going to be based upon your own skill sets and abilities. Now, guys, as we shift our focus from the process and the concept to the product that we use in order to implement the infinite banking concept, Rob, tell us a little bit about whole life insurance that we've already discussed, and what makes this the best place or the best vehicle to implement IBC.
Yeah, it's a good question. So in the book, Becoming Your Own Banker, Nelson talks about the process of infinite banking, and that's really what it is. It's a process first and foremost. We'll talk about this, in recognizing, the benefits of becoming your own banker, what opportunity cost is, economic value added, time value of money. Those are like real important things that we'll get into later. But when you're your own banker, then you can follow these processes of banking. But there's ways you can do it. You can be recognizing the EVA or economic value added. When you're just using cash, you'll be better off. If you use EV, you recognize opportunity cost. When you're using CDs, you'll be better off. If you do the process of banking with any other product, you'll be better off. But what Nelson recognized is that mutually owned, dividend-paying whole life insurance is the most efficient product to do the process of banking. And so when we talk about product, the most important part is process, but now let's apply that process to the most efficient product that's out there. And it just blows your mind when you see all of the benefits and properties of dividend-paying whole life, and how I always kind of describe it as a supercharged savings account. It's a savings account with equivalent or better rates of return. It's private. You have all the control. It's protected. It can be, you can access it whenever you want. It's liquid. I mean, it's amazing when we'll go through the list. There's a good list of properties. We'll go through it in a future episode, but the product is the best product for infinite banking or becoming your own banker, is dividend paying, mutually owned life insurance.
John, tell us a little bit about what makes the life insurance policy, the design of the life insurance policy, so critical?
I was going to say, and I'll answer your question, Derek, but I was going to say real quick is just if you're out there and you've never heard that whole life insurance provides access to cash value, then you're not alone. That was me before discovering IBC, before reading Become Your Own Banker.
Same with me.
Rob, like many people can assume that that's just a general, known fact that, oh, whole life has cash value associated with it and I can access it. I did not know that. I was never taught that. And so that's just a new way to think that insurance, which I've always thought insurance, I want the least cost for the most protection. And the cost that it is just a bill and I'll never see it again. Just like auto insurance or term life insurance, even, you never really see it back. And so here's a product that Rob just described really well, that you now have access to what you put in while it's providing the same protection that you otherwise would have gotten through, say, a term insurance policy.
So, John, tell us a little bit about the way that we design this policy is for a very particular purpose. What is that purpose? How might we design it? And what does that benefit the end consumer?
Yeah, I mean, we are specifically trained on this. We have been trained to become infinite banking concept practitioners. And the special design is broken up in two main parts. There's the base premium of a whole life product, and then there's the paid up edition, which you'll hear us refer to as PUA from here on out. But we take those two aspects of a whole life product and maximize the efficiency of immediate access to the cash value or what you've put in, as well as not jeopardizing the protection that it'll provide for you and your family. And so one of the main principles of the infinite banking concept that we'll definitely talk about later on is think long term. And so we strategize and specialize your whole life policy for a long term mindset, but also you can take advantage of it, as soon as the policy's in force. And so most whole life products, like if you just go to State Farm or whoever else, they'll just give you, all base. They won't talk about any of the other maybe living benefits of it. And you may be, missing out on some of the benefits of that whole life product. But we've been specifically trained and we practice it ourselves on how to make the most of the present day and long-term benefits that it'll offer you.
Great, guys. As we are talking about now the product, we've talked about mutually owned dividend paying whole life insurance as a place to store capital, when in fact we're paying premium to the insurance company. And along the way, we're building up equity in the form of cash value that we're able to access. So we're storing capital in the sense that we're storing or banking up the insurance company's money as we continue to pay premium over time. And now we're going to access that capital and create a loan, a policy loan is what it's referred to as, where we're borrowing money from the insurance company based on how much cash value we've stored up. And we're able to utilize that for whatever we need. If it's financing your next automobile, a down payment on your house, paying off student loans or credit card debt, you're able to access that liquidity in that policy loan. And you're able to utilize it not only for debt instruments or financing in your life or your family's life, but also future investments and external opportunities to generate more income for yourself. So this is a place where now we've got liquidity, security, access, all without having to liquidate our assets, all without having to take any penalties if we were to store money in a 401k or IRA. We're doing this without penalties, and we're borrowing other people's money, specifically the insurance companies.
Mm-hmm. And I think the big thing, I think we touched on it earlier this episode, is that you control the terms of repaying that loan. One of the big things my wife actually, I think it's just hilarious even reflecting on it, is I was talking about, absorbing other debt that we had into my own policy, into my own banking system. And because it's called a loan, I think that maybe has associations and connotations for people that is not the case with a policy loan. But, talking with my wife about that, she was saying, I don't want anything to be associated with a loan. I don't want anybody knocking on my door, and having that moment to reveal, like, hey, by the way, this policy loan, nobody's going to knock on your door. Nobody is going to ask you to pay a minimum, say minimum interest payment or monthly payment or quarterly, whatever it may be. You set the terms, you control it all the way until even the day you die. Rob, why would the insurance company not really care about when you pay it back?
I mean, that's one of the kind of the things that'll blow people's mind is because the reason why the insurance company doesn't care if you pay it back is because you have the death benefit, as the guaranteed a part of the contract. So if you pass away, then they deduct whatever you owe them from your death benefit. So they don't care if you ever pay it back because they're going to get their money one way or another. And so it's just, yeah, that's such a freeing idea when, like you said, maybe we'll start, I call it moving outside debt into inside debt. I'm not sure what you guys kind of refer to, but I'm sure we'll come up with a common way of saying it. But when you move outside debt into inside debt, there's so many benefits that I don't think people are aware of. You get the title. That's like the bank doesn't own your car anymore. When you pay off a car loan with a policy loan from the insurance company, you get the title. The bank doesn't own the car anymore. You own the car. You still, have to, you don't have to pay the loan back, but you now have an obligation to pay that loan back to the insurance company. And if you're going to be an honest banker, as Nelson Nash says you should, and what we believe you should, you need to pay it back with interest. But you are in control of those terms. If you have a tight month or some, a furnace goes out or something, you don't have to pay it back. You can wait, and no one's knocking on your door, like you said, John. So just that this amount of peace you get when you take your outside debt and you move it inside, you have control over it. You have control of the terms. It's really a good feeling. And then the other thing I don't think people realize is when you take your outside debt and you move it inside, one of the great things about insurance and the cash value and working with a private contract with an insurance company, it's private. So that visible public debt that just got moved inside disappears from the public realm. So your debt to income ratio just changed that quick. So that's, I think, a thing people don't realize. If you have outside debt and you have enough cash value to move it inside and control the payment structure and to pay it back even faster, the moment it gets moved inside into your policy, into your family banking system, that debt disappears from the public. And it's really a powerful thing to get your head around. You can really instantly increase that debt to income ratio, which would potentially enable you to leverage other deals that you might not have been able to do because of that debt to income ratio. So there's just so many benefits to it. It's really infinite, when you keep thinking of something new all the time.
Yeah, the last point I want to touch on with these policy loans and to maybe provide an example of some numbers for our listeners is I was doing some research on auto loans recently, and I think we're up at like 8.5% on an auto loan, whereas I could access the capital in my infinite banking policy through the policy loan, and I'd be paying 5% or 5.2 or 5.5% to the insurance company, but I'm able to keep that spread between 8.5 and let's just say 5.5. I've got 3 points of spread there that I can keep and now fund that back into my policy and allow it to compound for the rest of my life.
Mm-hmm.
That's really, really powerful to me.
Yep. And oh, by the way, it's readily accessible as soon as you make a repayment.
Right.
If you have a mortgage or say a car loan, if you pay above and beyond or you just pay the minimum payment, you don't have access to that money that you just paid into it, even if it's breaking down the principal. And so the policy loan is another aspect of it, is it's similar to a line of credit or even say a credit card, is as soon as you pay it off, that amount that you just paid off is now immediately available for you to use again.
Yeah, I was thinking even about why would somebody want to pay, the listener might be hearing, oh, but I still owe the insurance company 5 or 5.5%. Why would I want to borrow money from them at that rate? Isn't there a better way? Can't I just pay cash? And the way that I think about it is, well, which bank do you want to make the most profitable? If you pay cash, you're giving up access to that capital and the ability to earn or generate more income off of that for the rest of your life. Once it's gone, it's gone.
Yeah.
If you take out a loan from a commercial bank, now you're paying all the interest, all the profit to them.
Mhm.
But by paying your policy loans back to the insurance company, you're ensuring that that company remains profitable. And as a mutual owner of that contract, that means that they're going to continue to fund more dividends your way and build up more and more capital as time goes on. So we're really incentivized to leverage the insurance company's money through the policy loans as much as possible because it means that they're going to remain profitable over time.
Yeah, and then when it really kind of clicks in your mind that your policy is your family bank, you stop thinking about things in terms of, well, I got to pay this amount back into the bank, into my bank. It just becomes a place where you put all of your money. And so it's you don't even you like the whole idea of payment terms just start disappearing because you're just putting everything you have in there. So by just natural action of putting all of your extra money in back into your policy, you're paying that thing down way faster than you would have if you would have just stayed to this little structural, program. So just by doing natural savings, you're going to be paying your things off faster and getting all the benefits, and then being able to reuse the money if you need to without any limitations to it. It's really freeing, and you have all the control, all the liquidity, all the protection, all the privacy. It's really powerful.
And to add to Rob's point, is this can't all be done in just one policy. And we can talk about this later, especially as we go through the book, Becoming Your Own Banker. There's a page in there that Nelson Nash says something that absolutely, even still, revolutionized my understanding of the infinite banking concept, where he says that your premium and your income should equal each other. So Rob talked about just you want to continue funding your bank. You want to continue putting money back into your own system. And this cannot be done with just one policy. And so another thing I didn't know before reading Become Your Own Banker is that you can own multiple policies. And so that is the goal is eventually is to own multiple policies. Right now I have 4. I know Rob and Derek have multiple. And many people who practice IBC own many policies. Nelson Nash himself, the author, I believe at one point owned 49 policies. And so that's just another part of the product to execute the process that we're talking about with infinite banking concept.
Yeah, and eventually, as you do this banking process, you start to take advantage and you start to benefit from the efficiency of your system, and you start to get more income. And then eventually you have all of you can't, because there's only so much money you can put into a policy each year. If you have loans out, you can fill those back up. But if you pay off all your loans and you paid your premium for the year and you have cash, you need to put that somewhere. So then you start up another, like Nelson calls it a branch. You start up another banking branch, start up another policy. So you have another place to put your cash. So you start to establish a system of policies, becomes your family banking system with different branches. As a bank becomes profitable, it branches out. It starts to bank in a new town, in a new town, a new town. Same idea. As you become profitable and you can't even fill up your bank is full, your primary one, you start a new bank, start a new branch. And you just keep expanding and growing it as you need to.
John, why don't you touch on a little bit about retirement or income planning as you age and the legacy that whole life insurance can provide to your family?
Yeah, this is really close to home for me. This is one of the aspects of infinite banking concept that really opened my eyes to the power that it and the hope that it provides for everyday families, everyday individuals. And so, Nelson Nash talks about his views on retirement, and it kind of goes along the lines of one of the cliche sayings, if you enjoy what you do, or if you love what you do, you'll never work a day in your life. And so, Rob, Derek, and I, we love what we do, and we plan on doing this for as long as we can. But those of you, and for us, even at a certain point, we won't be able to do what we're doing right now. And if you are planning for retirement, say you have a 401k, say you have a Roth IRA, or some qualified account, you're probably looking towards, age 65, 70, and trying to plan out what that income is going to look like. In Become Your Own Banker and through the infinite banking concept, it is explained on how you can take tax-free passive income, essentially retirement income, to fund your retirement, to fund those passive income years for the rest of your life. Probably more, if I had to guess. I know for me it's true, probably more than you otherwise would have been able to take out in, say, a retirement plan for the rest of your life and never run out of money. And it's tax-free through the provision of a policy loan, and still be able to leave a larger death benefit for your family, for them to be taken care of, and to perpetuate this family banking system that you have established for many generations to come. And so thinking about, this process that I'm going to just talk about myself, but this process that I've started, that I'm working towards, that I'm building, not only is it going to take care of my wife and I and say the retirement passive income years, but I know for a fact it's going to all the more take care of my kids and, Lord willing, their kids and, my grandkids, and continue this, Castaneda family bank to continue to control the banking function in many generations to come. And by the way, that death benefit is tax-free, income tax-free as well. So that is guaranteed to happen. We're all guaranteed to stop living, to graduate, as Nelson would put it, and to know and to be sure that you're going to leave a legacy. In this case, it's through money, but hopefully it's through your values, through the education that you provide your family and generations. To know that that's actually a guarantee is really freeing and provides me at least a lot of peace.
Mm-hmm.
Rob, why hasn't our listeners potentially heard this before? Is this something new? Is this a revolutionary idea? Or why haven't they been taught this before?
No, that's a good question. And that's a question we get all the time, is when we share this with people, they're like, well, why haven't I heard of this before? And why isn't everybody doing this? And I guess maybe to add to that, it's been around for a long time. The insurance companies have been around for, is it 200 years? Some of the oldest ones. The ones that we work with are over 100 years old. That was the way people saved money back in the day, was just straight up, 100% base whole life. And then in the 80s, the stock market, late 70s, 80s, the stock market became kind of a thing, or it did become a thing. And all the, I'd say the mechanisms of the world saw this opportunity of let's encourage everyone to pour their money into mutual funds, into the stock market, so that we can manage it, we can control it. And then that whole life fell out of favor. And so really it's just not a process or a product that people use anymore, because everybody's putting their money under someone else's control. And the people who run the systems of this world, they like having that control. They like managing your money. They don't want to make you aware of other options where you can have control and you can manage the banking function in your life, and you can take advantage of it. And so it just isn't marketed, because it's not in the interests of the global system, to let individuals become aware of a process and a product that can free them from the systems that want to control you.
Excellent. Well, in the weeks ahead, guys, as we're not only discussing the infinite banking concept, but training our listeners on how to implement this in their life, we're going to be going through page by page Nelson Nash's book, Becoming Your Own Banker, which we've referenced multiple times already in this episode. We'd encourage you to get the book, follow along with us, ask us any questions that might come up, and we look forward to seeing you in the next episode.
Thank you for joining us. If you're interested in a conversation about anything we've discussed, you can find our contact information in the show notes below.
And subscribe, follow, and leave a review to help spread this message and to help families across the country discover the generational blessing of IBC. May God bless you, and we'll see you next time.